Hi and welcome. Today, we are going to tackle a very common but sometimes confusing task in QuickBooks: how to properly categorize refunds. Getting this right is essential for keeping your financial reports accurate, so let's dive in and make it simple. There are a few different scenarios for refunds, and we'll walk through the most frequent ones. The most common situation is when you receive a refund for an item you purchased for your business. This could be a return of office supplies, a canceled subscription, or a rebate from a vendor. When you see this money deposited into your bank account through the QuickBooks bank feed, your first instinct might be to categorize it as some form of income. However, you must avoid this mistake. A refund is not new income, it is the reversal of a previous expense. To categorize it correctly, you need to assign it to the very same expense category that you used for the original purchase. For example, if you bought a printer and categorized it under office equipment, the refund for that returned printer must also be categorized as office equipment. This action correctly reduces the total amount you've spent on office equipment, ensuring your profit and loss statement is accurate. Think of it as putting the money back where it came from. The second main scenario is when you, the business owner, have to issue a refund to one of your customers. This process is different because it impacts your sales income. You should not simply record this as a generic expense. The proper way to handle this in QuickBooks is by creating a refund receipt. You can do this by clicking the plus new button and selecting Refund Receipt. You will then fill out the customer's information, the date, and importantly, the product or service for which you are issuing the refund. This tells QuickBooks to decrease your total sales income and also correctly adjusts any sales tax you may have collected, which is critical for accurate sales tax filings. A less common but important situation involves a vendor credit. This happens when a vendor owes you a refund but gives you a credit to use on a future purchase instead of cash. To track this, you would create a vendor credit in QuickBooks. Again, go to the plus new button and choose Vendor Credit. Fill in the vendor details and the reason for the credit. This credit will then sit on the vendor's account, and you can easily apply it to the next bill you receive from them. So, the main rule to remember is that a refund you receive offsets an expense, and a refund you give offsets your income. Always trace it back to the original transactions category. Thank you so much for watching this guide. We hope it helps you manage your books with more confidence. If you found this video useful, please hit the like button and be sure to subscribe to the channel for more simple tips and tutorials to help you master your business finances.